Hi, I'm Glen Byrne, finance broker with 6 Point Finance. Today I'm going to talk to you about a topic called cross-collateralisation. Now, you may not have heard this term because it's quite likely your bank is not going to talk to you about it. Often heard the term being tied up with red tape. Cross-collateralisation is exactly that. What it does is enables the bank to have total control over your assets because they've tied them all together with the facilities they've got. Quite often business people find that this is certainly the case, and it makes it very difficult for them to achieve what they want in business. If they happen to have the business premises, the home tied in, sometimes their plant and equipment all tied in with one facilities or a number of facilities, but they're all cross-collateralised. When they need to dispose of or purchase additional assets, they're quite often limited as to where they can go because all those securities are tied in together. So by doing this, again, the client loses control. The bank retains control. Same when you've got two individual properties. When the bank has them cross-collateralised, if you need to sell one and you want to retain the proceeds from the sale of that home, when it's cross-collateralised, the bank has the option. They can take the proceeds and do with it what they want. However, when they're with different lenders, you have the option to do with what you want with the proceeds. Again, greater control. I'm a firm believer that you should retain control of your finances, not the bank. Let me go through a bit of an example of how the bank would potentially cross-collateralise you and how we could potentially structure things a bit differently so you retain control. Suppose you own a house and it's worth, say, $550,000. So you've done pretty well and you've managed to get that debt level down to $150,000. Your income at quite a reasonable level, and you're interested in buying an investment property. But at the moment, you don't have any spare cash because you've been paying all your money off your mortgage. Now, if you go to your bank and request a loan to purchase the investment property, and you want to borrow 100% of the purchase price plus the cost, your bank will no doubt come and say, no problem, we can do that for you. We'll use the equity in your existing home, plus we'll take a mortgage over your new property, and we'll be able to lend you all the money you want to be able to do that. That's great in that it provides one solution that enables you to purchase the property. However, do you really have the control over both those assets, or does the bank? I believe by doing the structure that they've suggested, that they've got control over the assets, not you. I'd recommend a different strategy. What I would do is I would get an equity loan against your home that you own and that you've got equity in at the moment, and provide sufficient equity in that to enable you to purchase the other property with, say, 20% deposit. By doing so, you'd be able to have a separate loan of 80% against the new property you're buying. In doing so, you potentially have two different funders and you have control over both of those assets. This provides you with more choice in ensuring that the loan you get for your investment property is the most appropriate for you at that time, as opposed to just accepting the product that the bank is offering because they currently hold your security. Now, banks have the products, however, it's the skilled brokers that have the ability to find the most appropriate product to meet your individual circumstances so that you can achieve your goals on your terms rather than on the bank's terms. So when you're next looking to purchase a property, talk to your broker first, and then they can look at the most appropriate product that's going to meet your needs. I hope you found this informative and understand the issues that can crop up with cross-collateralisation, and that you consider this when you're next looking to purchase a property. Thank you for watching today, and have a great day.